Welcome back to the Ticks and Trades channel. We're covering Thursday, October the 23rd. And after yesterday's kind of decisive drop, the Bulls decided to remind us that they're still in the game. Overnight, they made a brief attempt to reclaim lost ground, but by the opening bell, things had kind of flattened out. Price spent most of the pre-market flirting with 668.20, and that level quickly became the focal point for the day. We'll start with the game plan, and I'll show it to you. Read through these notes, and it will make sense that the axis for the session, at least the morning session, was 668.20. That was kind of a line in the sand separating potential recovery from renewed weakness. Basically saying above it would favor the Bulls, while closing meaningful candles below it would suggest that the Bears still had momentum. Also noted that divergences were kind of starting to show up across multiple time frames. The daily chart was still in that longer-term bearish consolidation, but intraday signals kind of hinted at possible rebounds, specifically signals on a 3-hour and a 1-hour chart from yesterday. Those were pointing to possible higher prices today. In other words, both sides had a case, and traders were wise to let price prove itself before committing capital. So the plan was for this 668.20 to act as the morning gauge. Above would be bullish, below would be bearish. This is what we had going into the day, and here's a screenshot of what the market looked like, or at least the 1-minute chart looked like of the SPY, with the levels plotted. When the opening bell rang, the Bulls took command. Price went up for a while, but they came back down, briefly dipped into this 668.20 area around 10:20 a.m., found support, never looked back after that. So per the game plan, we just looked at this. This axis level was not meant to be traded directly, served purely as a reference level. For all we knew at this point in the morning, the Bears could have had the strength to get below this level and would not have been good to be on the long side if the Bears were in control at this point. As it turned out, though, this level was good support and would have provided a good trade for anyone willing to trust it. There was an interesting omission in the game plan I want to point out. When price stalled out right here, reversed, time 9:52 or so in the morning, this area here was the 75% retracement of yesterday's decline. The precise level would have been around 670.60. That's what would have been on the board. Didn't have it on the board, though. It behaved perfectly as designed. So that was on me. This level should have been there. Later in the session, price did inch up to 672.02. Topped out right about 40 cents here below the level. Finally reached it at 140 or so, and then got out of the money. If you had traded this level per the rules, a short entry there would have produced a 5-point fumble. Reversing that would have given you a wash because they came up just shy of giving you your base hit on the reversal, and they came back down to your entry point a few times. That was the market's polite way of saying enough long trades for the day. So if you could, you would have jumped out at a wash. That would have been per the rules. All told, traders following the rules gave back a few points to the market, but no damage done. Just a reminder that patience is as much a skill as execution. As for my own trades, there were none. After seeing the reaction at that retracement level, and then the bounce at 668.20, the axis level, I chose to simply observe. I don't want to waste your time, but I just want to scrub through this so you can see it. I stopped the recording and shut things down around my usual time, about 2 hours into the session. Trading within that window, like 9:30 to 11:30 a.m. Eastern, it seems to work well. It leaves space for consistency without the fatigue that leads to impulsive decisions. Most of the bad trades I take tend to be in the afternoon when I didn't get anything in the morning. So it was just good to call it a day at 11:30 if you can do it. So this is the end of the day for me. No trades. Over on the tracking logs, fairly straightforward. The first one up is the PBR log. That's the playing by the rules log. That fumble meant you gave 5 points back to the market. In the big picture, no harm done. And then the Sam's trades log, flat on the day. And by the way, I'll go back to the playing by the rules log. I'll take this time to point out that despite days like today that end on the flat line, as well as days like, when was it, last Wednesday, October the 15th, where a lot of points were given back to the market, the performance of this strategy by trading each level systematically and pulling only 4-point base hits from the E-mini futures is decidedly positive. We're almost at 10 full months into the year, and we are over 170% rate of return so far. If you've just stumbled across this channel and are wondering what this log is all about, here's a brief explanation of what you're looking at. Everything is currently filtered to show only trades taken at these daily levels for the year 2025. This goes all the way back to January of 2025. The way I measure rate of return is by assuming a starting balance of $50,000 at the beginning of the year. Then every level for each day is traded using the same approach each day, taking the bad with the good. And at this point in the year, that $50,000 would be worth $135,000. That's a gain of $85,000. And that is your 171% increase. There have been 179 days this year where levels have been hit and trades taken. Of those, over 77% have ended in the green, and 22% of those days have ended in the red. Those are the cold, hard numbers. Of course, all these profit potentials shown in this table here, like what the profit or loss would be for the day according to the number of ES contracts traded, like 1 through 10, these are gross amounts, like commissions, fees, taxes, they're not factored in. But feel free to go back and look at any or all of the preceding recap videos that I've made over the past few years, and you'll begin to see some patterns emerge. There may not be anything sexy or spectacular about just trading relatively small scalp trades each day in the E-mini futures, but they are the most probable to work out with how these levels are identified. And the rules of the strategy do maximize pulling the most likely amount of points at each level, while at the same time keeping you out of trouble when levels don't work out. You saw that happen today. There is a rule that covers every scenario. But enough of that, let's go back to the daily chart. When you step back to this daily view, the market once again finds itself teetering at the edge of its range. The bulls managed to push price back up toward that decision zone near 674. That's right above the all-time highs. But they have not yet proven that they can sustain a breakout. Tomorrow's session carries weight, not just because it's Friday, but because several economic data releases are scheduled for the morning. And when time and price converge the way they're lining up now, catalysts like that tend to find their moment. So whether it's a surge or a reversal, we're likely to see some movement worth noting, and it could start tomorrow. Subscribers will receive tomorrow's levels before the opening bell, as always, complete with the structure, logic, and rules that make the process work. So stick to the framework, respect the signals, and the long-term consistency takes care of itself. That's a wrap for today, October the 23rd. Stay alert heading into tomorrow. There could be some volatility on the board. As always, stay disciplined and trade well. I'll talk to you in the next one.